Welcome to the Hurst Trading Room. This is our video update for the 13th of May 2013. We've had another very good week in the markets. We've been long the US markets and of course have made a profit as the US markets have continued to march upwards, and we went short both the currency pairs that we trade against the US dollar, the British pound and the euro to US dollar. So let's take a look at the markets. Before we do, please make sure that you have read and understood these disclaimers. Let's start by taking a look at the trades that we're currently in and what we're doing to monitor them. First of all, here is the Nasdaq trade that we've been in, which is of course an A category long trade, and it's turned into a fantastically profitable A category long trade, as you can see. And it's on the basis that price was climbing out of a 20-week cycle trough over here in the middle of April. So that's a 20-week cycle trough. And we entered the trade as price crossed the FLD. And the market, as you know, and as you can see on the chart, has simply kept going up since then. So in fact, this trade has almost certainly morphed itself into a C category trade. But of course that doesn't really bother us. That is because somewhere in here probably is a 20-day cycle trough, although it's been very hard to identify any cycle troughs because the market has been heading upwards in very much a straight line. In fact, there have been only 3 or 4 down days in the past 3 weeks or so. So what is happening is that, of course, we have a dominant cycle which is driving that market very hard, and it's at least a 40-day, if not 80-day dominant cycle. It's very hard to tell at the moment exactly which cycle it is, but it is certainly a longer cycle than the cycle that we are using as our signal cycle, and so as a result we're getting very strong and direct movements. So what we're doing at the moment is that we have, of course, started implementing our 3-bar trailing stop, and as you can see, that has raised the level of our stop loss exit on this trade right up to here at a level of 29.37.5. And that means that we will be exiting from our trade 3 at a pretty good profit, at a better profit than we took from our trade 2. So let's just go through those exits again. Here, of course, was our entry price, the level of this green line. That's our entry price. And over here is our T1 target. So we took a small profit at our T1 target when we exited from our first trade. Over here is our T2 target. So we took more profit when we exited from our trade 2 at the T2 target, and now we have only our trade 3 open, and as you can see, the exit for that trade 3 as of today is at this level over here. And so if price does come down today, then we will be exiting from trade 3 at that level. That level, of course, keeps moving. It's a 3-bar trailing stop, and so during the course of the week it will move, and you'll notice that that exit level is ever so slightly above the current level of the FLD. But if we get to the point where the FLD level is higher than the 3-bar trailing stop, then we will of course exit at the level of that FLD. So that's the Nasdaq. We're not in a long trade in the S&P 500 because of the analysis uncertainty that we were experiencing around about the time of entry into this trade over here in the middle of April. And if you go back and take a look at those videos in the middle of April, you will see my discussion about how to handle analysis uncertainty. And one of the ways in which I do it is I trade closely correlated instruments. And if I'm not convinced about a particular analysis, I will enter a trade in one instrument but not enter a trade in the other instrument, and thereby mitigate my risk to some extent. Of course, if we'd entered into a trade in the S&P 500 as well, we would have made twice as much profit. But a missed opportunity is not a losing trade, so I'm delighted to be in a winning trade in the Nasdaq. Let's take a look at our currency, our Forex pairs that we're trading, the euro to US dollar. Now we're getting some very good clear cycle shapes in the euro to US dollar at the moment, and as you know, I see M-shaped cycles in the markets, and so there is the M-shaped cycle for the current 40-day cycle, because of course the market is at the moment heading down, or it has perhaps just formed the 40-day cycle trough. Here is the nest of lows, indicating that we are expecting a 40-day cycle trough to form at the moment in the market, and we've seen very clear cycle moves, a very nice clear M-shaped move into that 40-day cycle trough, which is an indication that we don't have a longer dominant cycle really pushing this market at the moment. So it's made it much easier to trade, and as you can see, we've taken several profitable trades in a row. Here was our A category trade, which was really nice and profitable. You can see those green lines. And here was our C category trade that we took, a very quick trade that I spoke about last week, and that was also a profitable trading opportunity. And in last week's video I spoke about how our next opportunity would be a short D category trade as price crossed down below the FLD. And so of course price did cross down below that FLD, and we entered into the short trade. It's worth zooming in here because there's a little bit of some sort of detail to this trade which is worth thinking about. The first thing is that the FLD is over here, and on Wednesday of last week, as you can see, price came down to the FLD, touched it, in fact slightly crossed below it, but we didn't enter at that level. The reason for that was because it was within the previous bar's price range. Okay, so our entry level was actually set a little bit below the FLD, below the previous bar's low. On the Thursday, of course, the FLD was right up here. That was the level of the FLD on the Thursday. Again, we didn't enter into a short trade at that level because of our rule that we don't enter into trades within the range of the previous bar's trading. And so again, the entry level was set below the low of that day. And so here it is here. That's our entry price, the level of that red line. And our T1 target was reached. There it is over there. Our T1 target was reached on the Friday. Now our T2 target was adjusted over the weekend, and it is a much smaller T2 target than one would normally expect. And the reason for that is because our entry was displaced from the level of the FLD. Remember, the T2 target is calculated by taking a projection in price from the previous pivot point, either a peak or a trough, through the level of the actual price cross, which in this case, and it's calculated by Sentient Trader, but as a rough guess, I would say the median price crossed the level of the FLD somewhere around about there, and so therefore that is our target to the T2 exit. And so we exited from our T2 trade at a slightly greater profit than we exited from our trade 1, but not making as much money as we would normally expect to from the trade 2. So we are now in our trade 3. We have only one trade left open on this particular trade at the moment, and as you can see, well, I think you can see here, our exit from trade 3 has been adjusted to the entry price, so it's therefore a break-even level. So our trade 3, the worst that can happen with this trading opportunity at the moment is that we exit from our trade 3 at the level of entry at a break-even level, and so we make no money or lose no money from our trade 3, but we have already taken our profit, locked in our profit from our trades 1 and trades 2. So this has been a profitable trading opportunity. You'll notice, of course, that each of these trades has a different character. It's a very important part of the FLD trading strategy. This is a D category short trade as the market comes down into the 40-day cycle trough, and D category trades usually don't run on very far. We normally take our profit from at our T1 and our T2 level, implement our 3-bar trailing stop, usually don't make much more money out of our trade 3 than we made from our trade 2, because that is the characteristic of a typical D category trade. Let's take a look at the situation and the trade that we've taken in the British pound to US dollar. Now, the situation in the British pound to US dollar is slightly different to the situation that we are trading at the moment in the euro to US dollar, and that's because of the different situation in terms of the analysis. So let's zoom out here and just take a look at what is most likely occurring in terms of the analysis. First of all, the British pound to US dollar formed a very prominent trough of at least 18 months, perhaps even 54 months. And last week I spoke about why I'm reluctant to call it a 54-month trough, so I won't bore you with all of that again. But it is at least an 18-month cycle trough. And of course, following that, we have taken advantage of, I think we're in our fourth profitable trade since that trough. The cycles have been very clear in the British pound to US dollar. We can see good, clear cyclic movement. So here was an A category trade that we entered, and here was the D category trade that we entered, and an E category trade over here, a nice long trade. And so the trade that we're in at the moment is a short F category trade, and we've already exited from our T1 and T2, and so we've locked in our profit. So again, we're in a situation where we have locked in profit. Nothing can really go wrong at this point with this trading opportunity, and it is most probably an F category trading opportunity. Now, you will know in last week's video I spoke about again a little bit of analysis uncertainty in the British pound to US dollar, and we had two possible analyses, and I spoke about how we might be looking at a B category interaction instead of an F category interaction. As it turned out, of course, it looks very much like an F category interaction, and so that is the trade that we have made, is an F category trade. But because of that analysis uncertainty, you will know from last week's video, we didn't enter into the trade at the level of the FLD. You can see there's the level of the FLD, and we would have entered slightly higher if we had full confidence in this analysis. I didn't have full confidence in the analysis, and so I watched as price came down to the FLD. It is something that you sometimes have to do. You take a little step back and you watch as price comes down to the FLD. The worst that can happen is you miss a trading opportunity. Interestingly, last week price came down to the FLD, crossed below it quite strongly on Tuesday, as you can see. Then on Wednesday bounced back up again, and gave a very good example of price tracking along the FLD. So it was an interesting time, because I was expecting either a category B interaction or a category F interaction, and as of Wednesday night, certainly, it was looking very much as if though it was turning into a B category interaction, because as you know, between B and C category interactions, price tracks along the FLD, and price was tracking along this FLD with, let me clear this chart, with the high of each bar above the FLD and the low below the FLD. That's the definition of tracking along the FLD, and in fact it continued to do that on Thursday, but of course that broke down a little bit. So as mentioned in last week's video, I was watching this market to see which category interaction it looked as if though we were going to be trading, and I didn't enter into the trade on Tuesday at the level of the FLD cross. But I did, in fact, set an entry level below that low, because I knew that if price continued its move down, then that would probably not turn out to be a B category interaction, but in fact turn out to be an F category interaction. On Wednesday, the market played some games with us and tracked along the FLD, as I've just mentioned, and so it looked as if though it was turning into a B category interaction. But of course, I knew there was still a good possibility it might be an F category interaction. So we had a good strong move up on Wednesday. So with some confidence, I raised my entry level to the low of Wednesday. Okay, and that turned out to be our entry price, because I knew that if price reversed and continued down below that low, then almost certainly we were looking at an F category interaction. That still allowed me to take a small amount of profit out of the trade. If you had wanted to play it slightly more cautiously, you might have left your entry level at the level of Tuesday's low over here. If you had done that, then you would have worked out that your T1 and T2 targets didn't make sense. Following the principles of the FLD Trading Strategy, if your T1 and T2 target are in the wrong sequence, then there isn't enough profit to risk ratio to be made from the trading opportunity. So you would have said, I'm not taking that trading opportunity. And you would have sat back and not taken the trading opportunity. You might have cursed yourself for doing it on Friday, but of course the market's bouncing back again today. So if that would have been your entry level, then that would have absolutely been the correct decision to make, not to have entered into that trade, because your profit to risk ratios were warning you that it wasn't a profitable trade. There are many trading opportunities in the markets, and you really don't want to be jumping into a not very good trading opportunity. You want to wait until you get the perfect trading opportunities. So this trade took its T1 target out the day after entry. Friday last week took out its T1 target, and the T2 target, you can see here, was only slightly below the T1 target. And so it was also taken out on Friday. So we took our profits from this trading opportunity. Not a lot of profit, but nevertheless we took some profits, and our exit from our trade 3 is also now at a break-even level, at the level of the entry price. So that's it over there. So the worst that can happen to this trade as well is that we walk away with our profits from our trade 1 and trade 2. However, of course, often F category trades morph into H category trades. So something to bear in mind. We might have some more downside activity to look forward to in the British pound to US dollar. Thank you for joining me for this summary of the current trading activity in the Hurst Trading Room. In the full video, I take a look at the analysis in each of the instruments and identify upcoming trading opportunities in those instruments. If you are interested in viewing the full video, then please go to our Sentient Trader website, take a look at the training courses Hurst Trading Room page, where you can learn all about subscribing to the Hurst Trading Room. Thank you for your time and for your interest in Hurst cycles.